Something really big is changing in the business world. We're starting to totally rethink what it means for a company to be successful. And spoiler alert, it's about a lot more than just the bottom line. So let me ask you this. Is a company's only job to make money? For a long, long time, the answer was a pretty straightforward yes. But today, that answer just doesn't cut it anymore. It's way more complicated, and that's exactly what we're going to dive into. And here's the shift, really, in a nutshell. We've gone from a world where a company's report card was all about financial performance to a whole new reality. Now, everyone, we're talking customers, employees, investors, they all expect companies to be good citizens, to really think about their impact on society and the planet. So, here's our game plan. We're going to look at why this change is even happening. Then we'll nail down what modern responsibility actually means. We'll see it in action, figure out how you can measure it, and finally wrap up with how this is completely redefining what corporate success looks like. All right, first up, let's tackle the why. Why has this whole idea of corporate responsibility gone from being a nice to have, kind of on the sidelines, to being front and center in the corporate playbook? Well, the main thing to get is that corporate social responsibility, or CSR, isn't some feel-good side project anymore. It's not just about a company writing a few charity checks. It's now a core part of strategy, something companies see as absolutely essential for creating long-term value, building a great reputation, and frankly, managing risk. Okay, so we've established it's a big deal. But what are we really talking about when we use a term like modern responsibility? Let's get a couple of clear definitions down. So at its heart, CSR just means a company's job doesn't end with following the law. It's about them taking ownership, proactively thinking about the ethical, social, and environmental ripple effects of everything they do. It's about being a positive force. And get this isn't about throwing profits out the window. Not at all. There's this idea called enlightened shareholder value, which basically says that for a company to be successful for its shareholders in the long run, it has to take care of all its stakeholders, the employees, customers, and the communities it operates in. It's this idea that everyone's success is tied together. So what does a real CSR policy look like? Well, if we take a peek at a company like Fidelity International, you can see it's the whole shebang. It's about being transparent and ethical in how you run things. It's making responsible investments. It's taking care of the planet, supporting the local community, and of course, making sure your own people are doing well. It touches everything. Okay, theory's one thing, but let's see how this stuff actually plays out in the real world, over many, many years. And for that, Swire Pacific is a fantastic example. For them, investing in things like education and conservation isn't some new trend they just hopped on. It's been a core part of who they are for ages. It really shows you how corporate citizenship can be woven right into a company's DNA. And the payoff here is very real, even if it doesn't always pop up in a quarterly report. When you do this consistently, you maintain what's called a social license to operate, basically the community's trust. It builds stronger relationships, lowers your risk, and this is a big one. It attracts investors who are in it for the long haul, not just a quick buck. But here's the thing, right? You can't just say you're doing good. Good intentions are great, but for any of this to be credible, it has to be measured. So how do companies actually prove they're making a difference? It's actually a pretty straightforward process. First, you create a clear policy. Then you launch initiatives to put that policy into action. But these next two steps are absolutely critical. You have to measure your performance with real data, and then you have to report on it transparently so everybody can see what you're doing. So what kind of data are we talking about? We're talking about key performance indicators, or KPIs. On the environmental side, you might track carbon emissions or energy use. For social impact, you can measure things like employee volunteer hours or how diverse your workforce is. And for governance, you look at things like board oversight and audits. It's all about making the intangible tangible. All right, let's bring this all home and look at how everything we've talked about is completely changing the definition of a successful business. And if there's one thing to take away, it's this. In today's world, being a responsible company isn't just a compliance task or a box you check for the legal team. It is a genuine strategic asset. It's what builds resilient businesses, drives innovation, and creates real, lasting value. You know that old idea that you had to choose between being profitable and being a good corporate citizen? That's completely obsolete. The truth is, doing good and doing well are not competing objectives, but mutually reinforcing outcomes. They actually feed each other. So I'll leave you with this to think about. The next time you're deciding where to work, what to buy, or where to invest, how will you measure the success of the companies you support? Will you look beyond the numbers to see their real impact? Thanks so much for joining me.